More money on the cards now. Stephen's here talking business, starting with Deutsche Bank. This is a new story, really, isn't it? I mean, it's been hit with a new fine, though, by American and British authorities, Stephen.
The German lender's been fined almost $630 million over a Russian money laundering scheme. Now, $425 million of that is coming from New York's Department of Financial Services, the rest from the UK's Financial Conduct Authority. The authorities said the bank had missed numerous opportunities to detect, investigate and stop the trades, which saw $10 billion illegally moved out of Russia over a 4-year period. Josh Vardy has the details.
Another legal dilemma for beleaguered Deutsche Bank. The German bank says it's willing to cooperate with US and UK regulators and pay over $600 million in fines for its connections to alleged Russian money laundering. New York's Department of Financial Services said the bank had been aware of a string of red flags dating back to 2011 and had had numerous opportunities to detect, investigate and stop the scheme. An investigation launched by DFS and Britain's Financial Conduct Authority uncovered evidence of so-called mirror trades at the bank between 2011 and 2015. Clients were buying securities in rubles at the bank's Moscow office, then selling them for an identical price in dollars at the London branch. In a statement, DFS Superintendent Maria Vullo said these trades lacked economic purpose and could have been used to facilitate money laundering. Deutsche Bank has faced a series of fines and penalties in recent years. Earlier this month, the bank paid over $7 billion to the US Department of Justice for its role in mis-selling mortgages, which contributed to the 2008 financial crisis.
Well, let's say that's affecting Deutsche Bank's shares in trading today. They're up actually almost 2% in Frankfurt at the open. That's as investors really are relieved that yet another one of Deutsche Bank's problems has been resolved. Generally speaking, European markets opening up, as you can see. Shares in airlines and travel companies are the biggest fallers today in Europe. That's following on to the trend that we saw for American airlines in trading on Monday. In Asia, shares also following that negative trend from Wall Street. Generally speaking, we've got Asian markets trading down there. The Nikkei in Tokyo down 1.7%, falls 2 on the Mumbai Sensex and on the Kospi in Seoul. The Chinese markets closed for the New Year holiday.
France now, some new, very slightly encouraging figures on economic growth.
For the last 3 months of 2016, the French economy grew by 0.4%. That's faster than in the previous quarter. And for the whole of last year, France grew by 1.1%. That's slightly lower than in 2015, though. The Finance Ministry says that the conditions allowing that boost to growth at the end of 2016 should continue into this year. So a bit of optimism there.
Now, a group of technology companies are meeting today to discuss a legal challenge to Donald Trump's immigration order.
The firms are to talk about filing an amicus or friend of the court brief in support of the lawsuit being taken against the decision by the new president to restrict immigration from 7 Muslim-majority countries. That would allow the companies to offer arguments in the case without being named participants. The meeting is being organised by software company GitHub, but Google, Airbnb and Netflix have all been invited to attend. Some more of the day's business headlines for you next. Downloads of the car-hailing app Lyft have overtaken those of its rival Uber for the first time. The hashtag #DeleteUber took off on social media over the weekend after the company continued making pickups from New York's JFK airport despite a taxi strike against President Trump's travel ban. Earnings at Nintendo slumped by more than a fifth for the last 3 months of 2016 compared to last year, but profits came in better than expected thanks to a weaker yen and boosted sales of the 2 new Pokemon games for the 3DS console. Nintendo's gearing up for the launch of its new console called Switch in March. And Snap, the parent company to Snapchat, is going to make its stock market debut on the New York Stock Exchange. That's a major victory for the NYSE as it pushes to compete with NASDAQ for top technology companies. Snap's IPO could come as early as March. It's expected to value the company between $20 and $25 billion.
Now, last but not least from Stephen, an online campaign. This is against Starbucks, but it's backfired rather, hasn't it?
We were talking on Monday about the coffee chain's announcement it would hire 10,000 refugees. This after the United States suspended its programme to accept refugees. Now, Conservatives began a campaign to boycott Starbucks on Twitter. That took off quickly, not though because of its supporters, but because of people saying they would in fact be happy to go to Starbucks and not bump into their less liberal compatriots. One reading, all these people tweeting, boycott Starbucks. Good, don't come. A shorter queue for my Americano. These campaigns always do tend to backfire a bit because the company ends up getting actually a lot more attention as a result, which tends to essentially give them free advertising. So a boycotting campaign on social media, not always the most effective way to try and punish a company.
Other coffee brands are available.
Also available, yes.
Thanks a lot, Stephen. Good to have him with us back here at this time of day on France 24.